Hello, my name is Mike Sinibaldi and welcome to this week's video edition of Heard on the Street. In this edition, I'm going to take a look at the following markets: the E-mini S&P, copper, and the Euro US dollar. The first market that I'm going to talk about is the S&P. Tonight I'm going to focus on the two interpretations, the running triangle and the expanded flat. Each call for a near-term decline on Tuesday, but how the decline unfolds will provide the key to identifying which pattern is playing out. At the daily chart level, if the market is working a running triangle, then wave C circle is unfolding and wave B terminated at 1333.75. Then expect a 5-wave decline to where wave C equals wave A at 1297 and where wave Z equals wave W at 1294.25. Thereafter, look for another series of threes to complete wave D and wave E to complete wave 4. If the market is tracing out an expanded flat, then expect a greater overall decline, but not until wave 2 circle has completed. Looking at the front month contract, we can see a slightly different price pattern than that of the daily session continuous contract. In fact, the market appears to have traced out a leading diagonal. The only apparent flaw is that wave 5 is slightly larger than wave 3, but I've given some latitude here as throwovers are common to this pattern. If I'm right, expect a 3-wave decline that should not drop below 1302.25, followed by a 5-wave advance to complete wave 2. Thereafter, the market should turn decisively lower in 5 waves, where wave C of wave 4 equals 1.618 of wave A at 1217.25. The next market that I'll cover is copper. At the monthly chart level, copper has found support at the .382 retracement of the previous swing of 272 to 464.95 and held. Support below the market is between 335.3 to 345.7. This is also located between the span of the previous fourth. So logically, this is where I'm looking for supercycle wave 4 to end. However, just like the E-mini S&P, the weekly chart can be viewed in two ways. First, the bearish view, where wave 3 is unfolding to the downside, but a bullish alternative count is equally viable where wave 4 of Grand Supercycle 3 is still unfolding. You can see by the highlighted section that the structure appears corrective and contains wave overlap. In fact, I could label the structure as a double zigzag, W, X, Y. A break of 453.30 would confirm that wave 5 was underway and that wave 4 had ended. Only a loss of 385.35 would confirm the greater bearish view. The final market that I'll cover in this week's edition of Heard on the Street is the Euro US dollar. At the daily chart level, this is the chart that I left readers with, one where wave 3 was unfolding to the downside. Unfortunately, that's not what appears to be happening, as a decline from 143.45 to 139.69 was in 3 waves. Furthermore, the 100-period simple moving average has provided support, and 143.50 is now under pressure. It appears that wave 2 circle is unfolding as an expanded flat, so look for upside potential to where wave C circle equals 1.618 wave A to complete wave 2 circle at 144.51. While this would satisfy the minimal requirement for a correction, keep a cautious view, as this advance may only be wave A of a larger corrective structure that extends to the 0.5 or 0.618 retracement before resuming the larger trend down. I hope you found this information helpful, and best of trading.